Today is the second one in the dry bulk shipping stocks investment series. The value of dry bulk shipping company SHIP. Disclaimer: the content of this video is the author's personal point of view and analysis, which does not constitute any investment advice. If you are interested in this content, please use this link to join our Telegram group, where you will find more timely information and have the opportunity to participate in the discussion. Okay, shape. This is the chart of this company since I think since May of 2002. You see the recent trend is pretty strong. The reason behind this is the strong performance of the dry bulk shipping rate, especially the Capesize rate recently has been very strong. I think for almost probably more than a quarter at a very strong level. This is the basic data. A ship has 21 vessels. All of them are Cape or larger size. The shareholders' equity is 257.7 million. It does not have preferred equity. So the common equity book value is 257.7 million. It has 20 million 355 and 1,465 number of shares. So if you divide the common equity book value by the number of shares, you get net assets per share. It's worthwhile to note that currently the ships are selling much higher than their book value. So this net assets per share is a very conservative estimate. The actual market value is much higher. And then break-even TCE, it's 18,203. So we'll see it in a later page. Increase in EPS for every 1,000 increase in shipping rates is 0.3564. So you can also see it in the next page. Okay, this is the model I use to calculate the numbers I mentioned previously. All of these numbers are from their quarterly reports. This is the quarter 2 of 2005. If you have time, you can dig into these numbers, but what I want to point to your attention is the total TCE here in the middle of the sheet. It's 80,744. So remember this number. And then on the lower left corner, you can see a formula and a number. That is the 1,000 increase in shipping rates results in 0.3564 EPS. The next page is based on the quarter 1 2005 data. You see the total TCE 17,661. So this is the break-even TCE. You see, it's kind of varies from quarter to quarter because the cost fluctuates. It's not a fixed cost number because the company may have experienced more dry docking or receiving new ships. So a lot of different situations from quarter to quarter. So they result in a little bit different numbers. But what I'm going to use is the average number of these two. So I showed before, so it's 18,000, I think 300 something. But this every 1,000 increase in the EPS, this number is relatively stable. It's 0.3694, not too much different from the quarter two numbers. Okay, uh, this is another piece of data. This is directly copied from their quarterly report. So they gave some guidance on the third quarter TCE rate. What they're doing is, you see, they have 644 days, operating days under fixed rate. So that's a little bit long-term contract. And then TCE index linked, that is the TCE rate that linked to the BDI index. So I think it's linked to, should be Cape size index. So that is 1,162 days. And then the fixed rate TCE that is determined by the contract is 22,415. Index linked, I think at the time of their reporting of the second quarter, this number was 23,450. And then they, operating days times TCE, operating days times TCE, and then add them together and divided by the total operating days. So that is the average TCE of these two categories. That's 24,081. So that's at the time of their second quarter reporting. But after that, if you look at these numbers, things has improved a little bit. The Cape size rate throughout the third quarter is around 25,000. So it's a little bit higher than the number they used. The net assets per share is this. It's calculated before. Breakeven TCE, I mentioned that's the average of 2 quarters. Increase in EPS for every 1,000 increase in shipping rate. That's the second quarter number. Ship has 21 Cape size or larger vessels. And then look at the calculation at the bottom. So 25,000 shipping rate minus voyage expenses. That is from their financial reports calculated on the previous page. So that's the voyage expenses per day. That number is index linked TCE. So if they're under index linked contract, so they should use this 25,000 shipping rate minus voyage expenses. That gives you a TCE number. That number is the index linked part. So that's the second part of their TCE. If you look at this arrow, it points to this number 23,450. So that means because the shipping rate is higher than the assumption they used, so that result in the index linked TCE is higher than the number they used. And then in the next page, I replace that number with the calculated number based on the actual TCE. It's not exactly actual, it's the estimate of the actual. but it's much closer than the estimate they used because when they did their calculation, it's in the middle of the quarter. Now the quarter has already closed, so we have a more concrete number. So based on that, we revised the those shipping rates, and then it result in the average TCE is 23,673. So that's a little bit higher than the number the estimated number they gave in their quarterly report. And then based on this number, we do our calculation of the value of this company. So estimated TCE is this number, 23,673 minus break-even TCE. And then that's the TCE surplus of 5,470 per ship per day. And then that converted to EPS, that equals 5.47 times 0.3564. That's EPS of 1.95. That's the annual EPS estimate. And then corresponding shares price and PE 15. You use 1.95 times 15. That's $29. Remember, 17 is SP 500 30-year average forward PE ratio according to JP Morgan. So we use that 15 is more conservative than the 17 for SP 500. So that $29 share price is a relatively conservative estimate based on that P ratio 15. So the second valuation method is we use current asset price per share, net assets per share, 12.66, plus 1/4 EPS of 195 divided by 4, that's 0.4875. So that gives you 13.15. And then the third valuation methodology, we use current assets per share plus 1 year of EPS. That gives us 14.61. So taking into account the above valuation ABC, the current value range for ship is between 13.15 and 29. So in that range. The reason for current share price wandering below its value range is that the market is discounting the risk that the current shipping rate may not be maintained. Therefore, the more we see the shipping rates firming up, the higher the share price will go until it reaches its value range. In addition, the company is paying dividends. The dividend yield is 2.38% and the current share price of 8.4. It needs to be mentioned that this company used to pay much higher dividends. So under the current shipping rate, the Capesize shipping rate, the company should be able to pay a dividend that double the current amount. So that means the potential dividend yield is close to 5%. So that's the end of this valuation of ship. Remember, their value range is 13.15 and 29. So between those two numbers. So if the shipping rate can stay at this level for a much longer period of time, sooner or later, the share price should regress to this value range. But if the shipping rate start to turn lower, it may take another cycle for the shape's share price to reach this range. So the risk is here is the shaping rate. Okay, so that's the famous jump. Thanks for watching. If you are interested in the my presentation, please subscribe to my channel, and I think there's a bell you can click. Click on that bell. Then when I upload a new video, you'll be reminded. Thank you very much.